Is the German economy really shrinking? What do rising corporate bankruptcies mean? In recent months, one of the most widely discussed topics about Germany, Europe's largest economy, has been whether the country's economy is truly shrinking. Increasing corporate bankruptcies, slowing industrial production, and declining investment appetite have reignited debates about whether the so-called German economic miracle is coming to an end. Chart with downward trend: a notable increase in corporate bankruptcies. Since late 2024, Germany has experienced a clear rise in bankruptcy filings. Small and medium-sized enterprises, SMEs, in particular, are facing serious pressure due to high energy costs, rising interest rates, and weakening demand. The most affected sectors include construction and real estate, automotive suppliers, logistics, retail trade. Germany's economy grew for decades, thanks to its strong export-driven model. However, slowing global demand and increasing production costs have begun to challenge this model. High voltage sign: how did the energy crisis affect industry? Following the Russia-Ukraine war, the surge in energy prices directly impacted Germany's industrial competitiveness. Energy-intensive manufacturers have started relocating part of their production to Eastern Europe or Asia. The most critical consequence of this shift is clear. White right-pointing backhand index: Germany is beginning to lose its long-standing advantage of low-cost industrial production. Even industrial giants are becoming cautious. Automotive and heavy industry companies have begun evaluating their investments outside Germany. The transition to electric vehicles, rising digitalization costs, and increasing labor expenses are pushing companies toward countries with lower production costs. Economists emphasize that this situation is not a temporary slowdown, but rather a structural transformation process. Older man demographics: the silent but biggest challenge. One of the most critical issues Germany faces is its aging population. While the number of retiring workers continues to rise, new entrants are not joining the workforce at the same pace. As a result, production capacity is declining. Tax burdens are increasing. Social spending is expanding. The economic slowdown has therefore become not only a financial issue, but also a demographic challenge. Right-pointing magnifying glass: the real issue is not a crisis, but a change of model. There is an important detail many people overlook. Germany's economy is not actually shrinking. It is undergoing a necessary transition from an industry-focused growth model to a technology and service-based economy. In other words, what is happening is less a classic economic collapse and more a process of economic restructuring. White heavy checkmark: what could be the solution? According to experts, Germany needs 3 critical steps to maintain its economic strength. Key cap: 1. Skilled immigration policy. Rapid integration of technically skilled immigrants to address labor shortages. Key cap: 2. Reducing energy costs. Accelerating renewable energy investments, and providing industry-specific energy incentives. Key cap: 3. Digital and artificial intelligence transformation. Integrating automation and artificial intelligence across both manufacturing and service sectors. Bar chart conclusion: is Germany collapsing? In the short term, bankruptcies may continue to rise. Economic growth may remain weak. Fluctuations in the labor market may occur. However, in the long term, Germany is not expected to experience a